Good morning, it's Keith here, and welcome to today's 5 with Fitz. You know, it is the same old story again and again and again. What's that? Repetitiously redundant? But I digress. Anyway, the markets sell off for whatever reason. Media stacks up the doom and gloom stories. Loads of investors sell out because they let their emotions get the better of them. And Wall Street, of course, rallies. Then everybody who sold out gets left behind yet again. The point I want to make is that history shows very clearly, beyond any shadow of a doubt, in fact, that being invested in markets that may not be perfect beats waiting to invest in perfect markets. There is undoubtedly, and I get it, more volatility ahead, but just as undoubtedly, and this is what I want you to think about, that's going to be an opportunity. Question is what you do with it and what you make of it. So here's my playbook. Point number 1 today. The single most important lesson any investor can learn. Many investors get scared to the sidelines at absolutely the worst possible moments. In case in point, many people who were worried about further declines last night are now wondering whether they've missed the boat this morning with all 3 indices on the run higher. So take a peek at last night's short along with one of the single most powerful investing lessons of all. And one, I might add, that yours truly also had to learn the hard way years ago. Point number 2 today. Have the bears been shaken off track? I mean, that's the question on the minds of millions of investors this morning. And here's my take as to why that just might be the case with the super smart Stuart Varney, who asked me about it on Fox Business this morning ahead of the opening bell. I also provided a few thoughts on Apple and Tesla, both of which I believe are poised for another big run. And that video too is available on my channel. So please take a peek and let me know what you think. Number 3, this is a biggie. China's charm offensive is in high gear. There are scores of big-name foreign CEOs in Beijing right now for the China Development Forum, including Tim Cook of Apple, Cristiano Ramon of Qualcomm, Pascal Soriot of AstraZeneca, according to CNBC. Now, make no bones about this. The Western press is totally missing the real point here. This isn't just about trade or economics or even warming relations. Beijing wants to shape the world in its own image. And rolling out the red carpet for the world's most powerful CEOs is no accident. In fact, it is classic Chinese statecraft, the long game, built on optics, influence, and invitation. And it goes back centuries. Sun Tzu, who is a legendary Chinese general and strategist, once said, "Supreme excellence consists of breaking the enemy's resistance without fighting." And that's exactly what you're seeing now. China knows that it doesn't need to go toe-to-toe with the West militarily or even financially. Not when it can win with access, flattery, and FaceTime. Think about it. Getting the world's most recognizable business leaders to show up, let alone smile for pictures and praise China's potential, sends a far louder message than 1,000 speeches from the CCP ever could. The unspoken headline here, and the one that matters to you and me as investors: we're open for business, but on our terms. China is acutely aware that tariffs are going to cripple scores of high-priority business development activities, and not surprisingly, Beijing is eager to attract foreign investment again, both of which to acquire face, but also hard currency and intellectual property from their partners. But this is not because Beijing gives a rip about rejoining the global order. It wants to reshape it. Apple wants to maintain its foothold in China. Qualcomm needs China's vast semiconductor market. AstraZeneca, one of the biggest players in biopharma and a key supplier of medicines in China. My point is that China knows exactly what these companies want, and in exchange, it gets something far more valuable: legitimacy, leverage, and time. So the point I want to leave you with is don't fall for the optics. This isn't a summit. It's a strategic stage. And the world's biggest brands, they're definitely playing their part in a carefully choreographed dance, one that may look like cooperation, but smells a whole lot like something else if you're paying attention. So my point of view is this, and what you want to think about. The dragon is coming to dinner. The only decision you got to make is whether you and your money are at the table or on the menu. So that brings me to point number 4. Next-gen plastics equals next-gen everything, not just airplanes. Airbus and Boeing are both reportedly considering plans to produce 100 jets a month using thermoplastics if they can get a handle on production intricacies. The bigger issue, I think, will be the FAA and other global regulatory approvals, but hey, let's not put the engine before the wing or the cart before the horse, as the case may be. Think about this. Next-gen jets are going to be cheaper, lighter, and more fuel efficient if they're thermoplastics, or at least components made of them. Think defense systems that move faster and cost less. Think EVs that weigh less and drive farther. Think about robotics that are quickly, easily, and more profitably assembled and used using thermoplastics. This is going to be a game changer when it happens, not if. So stay tuned. We will definitely be revisiting this concept as digitalization and AI, both of which, by the way, are a huge part of material science, accelerate. Now, the investing tip around this is quite simple. The real opportunity for investors in a situation like this is almost always behind the headlines. Materials innovators, advanced composite manufacturers, IP-rich small caps with breakthrough tech, even large caps hiding exposure in their R&D pipelines or strategic partnerships. So watch this space. We're going to be talking about it a lot, I think, in the next 6 to 12 months. And finally, number 5. Here is what I think is another great sign that the bottom may be in, and probably that I haven't had enough coffee this morning. There's an old saying on Wall Street that flow follows price. And the translation is that investors are great at making the right decisions at exactly the wrong moment. And we've talked about this in the past. But here's the thing today. It comes as no surprise to me, zero, none, zippo, zilch, that CNBC is reporting a flood of attention at the ETF conference underway in Vegas right now, focused on, drumroll please, ultra short treasuries and fixed income. Because, of course, nothing says bold investing like locking in 5% while inflation's chewing your lunch, equities are gearing up for a run, and passive investing means you become the very market you fear. The way I see it, it is the financial equivalent of showing up at the beach with an umbrella after the thunderstorms pass. Now, let me be clear. I'm not mocking the strategy nor the thinking. Safety definitely has its place, especially in today's markets. But history shows very clearly that when Wall Street and investors pile into ultra-conservative plays after the market's already been battered, bruised, and body slammed, that's not prudence. That's performance FOMO in reverse, and a lot like selling I ran out of lips today. A lot like selling sunscreen in December. So anyway, historically, when investors cram into the safest stuff on the menu, treasuries, cash, gold bars under the mattress, it is usually a massive contrarian signal screaming the market's dashboard, hey, the bottom's probably already in. The move into fixed income right now gives me serious 2009, 2020, and even 2022 vibes. I would be hard-pressed to find a better signal, other than perhaps the AAII sentiment survey, which recently reached extremes, that tells us investors are once again doing what they do best, buying fear and selling opportunity and calling it wisdom. So don't be that person. You know the one who's still waiting for Dow 10,000 while NVIDIA eats the world, the S&P 500 prints new highs, and the next generation of millionaires is getting created. My investing tip here on this one is simple. When everybody else is rushing into safety, the real money is almost always already tiptoeing back into growth. So speaking of which, if you're an OBA and you're watching this, I'm going to have a few thoughts along these lines later today in this week's updates. And if you're not, and that sounds interesting, then take a peek at our website and you can find the link on my channel. Today's bottom line is very simple. Contrary to what many investors think, there is no shortage of profit potential out there right now. Just a shortage of people thinking big enough. As always, let's make it a great day and a fabulous week. You got this, I promise. I'll be with you every step of the way. See you tomorrow.